How Grace Kennedy became Jamaica's billion-dollar success story. Most Caribbean companies fail. They expand too fast. They borrow too much. They get destroyed by foreign competition. Grace Kennedy is different. Founded in 1922 as a small trading company in Kingston, Jamaica, today a $1 billion conglomerate operating in 60 countries. They make food products, they run banks, they provide insurance, they operate remittance services, they ship goods globally. They survived the Great Depression, World War II, Jamaican independence, multiple economic crises, and every challenge a Caribbean company faces. This is the story of how Grace Kennedy built a sustainable regional business, why they succeeded where others failed, and what they did differently than every Caribbean company that collapsed. The foundation, the diversification, the survival strategy, and why they're still growing after 100 years. 1922, Kingston, Jamaica. Two Canadian entrepreneurs, Fred Grace and John Kennedy, founded a small trading company. They sold canned goods imported from Canada. Flour, milk, sugar, basic groceries for Kingston's growing population. Nothing special, just a small import business in a British colony. But they did one thing differently. They reinvested profits. While other merchants spent their earnings, Grace and Kennedy bought more inventory, expanded warehouse space, hired more staff. By 1930, they were Jamaica's largest food importer, not because they had better products, because they reinvested systematically. Then the Great Depression hit. 1929, 1933. Global trade collapsed. Import businesses died everywhere. Grace Kennedy survived because they'd built cash reserves. While competitors went bankrupt, they bought their assets cheap. By 1935, they'd consolidated the Jamaican food import business. They owned warehouses, distribution networks, relationships with every major retailer. But they knew imports were risky. If shipping stopped, their business died. They needed to make things locally. 1940s. World War II. Shipping became dangerous and expensive. Imports slowed. Grace Kennedy started manufacturing in Jamaica. Canned goods, processed foods, beverages. They bought equipment, hired workers, built factories. By 1945, they were producing a significant portion of what they'd previously imported. When the war ended and shipping normalized, they had both manufacturing and importing. Diversification. That's the word that defined Grace Kennedy for the next 80 years. They didn't just sell food. They got into logistics, shipping, warehousing. They didn't just import goods. They started manufacturing them. They didn't stay in food. They expanded into financial services. 1960s. Jamaica gained independence. Many British companies left. Foreign investment dried up. Grace Kennedy saw opportunity. Jamaicans needed banking services, insurance, remittances, foreign exchange. Grace Kennedy created First Global Bank, started an insurance division, launched money transfer services. Why? Because diversification protected them. If one sector suffered, others would compensate. When food prices crashed, financial services were profitable. When banking struggled, manufacturing was strong. Other Caribbean companies focused on one industry. Grace Kennedy spread across 5. That's why they survived when others collapsed. 1970s. Michael Manley's government implemented socialist policies, nationalization, foreign exchange controls, import restrictions. Many Jamaican businesses fled. Others went bankrupt. The economy contracted 25%. Grace Kennedy adapted. They couldn't import as much, so they manufactured more locally. They couldn't export profits easily, so they reinvested in Jamaica. They built more factories, hired more workers, expanded domestic production. When the crisis ended in the 1980s, they were stronger than before. They'd used the crisis to build capabilities competitors didn't have. That's another Grace Kennedy principle. Crises are opportunities if you have cash reserves and patience. 1980s, 1990s. Caribbean integration began. CARICOM created a regional market. Grace Kennedy expanded beyond Jamaica. They entered Trinidad, then Barbados, then Eastern Caribbean, then Belize, then Haiti. But they expanded carefully, one country at a time. test the market, build distribution, establish relationships, then move to the next. They didn't do what Digicel did, borrow billions to expand to 31 markets simultaneously. Grace Kennedy took 30 years to expand to 15 Caribbean markets. Slow, methodical, sustainable. And they never borrowed excessively. They financed expansion from profits, not debt. That's why Grace Kennedy has minimal debt compared to Caribbean competitors. They grow at the pace their cash flow allows. 2000s. The big international food companies entered the Caribbean. Nestle, Unilever, PepsiCo. They had more money, better marketing, global brands. Many local Caribbean food companies died. They couldn't compete with the advertising budgets and economies of scale. Grace Kennedy survived by focusing on what they did better. Caribbean-specific products, Jamaican brands that international companies couldn't replicate. Grace Jamaican Jerk Seasoning, Grace Coconut Milk, Grace Ackee. Products with authentic Caribbean positioning. They also partnered with international brands instead of competing. They became distributors for Nestle, Coca-Cola, and others in Caribbean markets. That's strategic thinking. If you can't beat them, distribute for them. Make money from their success while protecting your own brands. 2010s. Grace Kennedy hit $1 billion in revenue. They operated in 60 countries. They employed 5,000 plus people, but they stayed focused on fundamentals, diversification, cash management, careful expansion, strong governance. They never had the explosive growth of Digicel or CLICO. They never made headlines. They just grew steadily. 5-8% per year, every year, for 100 years. That consistency is rare in Caribbean business. Most companies boom, then bust. Grace Kennedy just compounds. Why does Grace Kennedy succeed where others fail? 5 reasons. First, diversification. They operate in food, banking, insurance, remittances, logistics. If one sector struggles, others compensate. CLICO was only insurance. When that failed, everything failed. Grace Kennedy spreads risk. Second, conservative financing. They avoid excessive debt. They grow from cash flow, not borrowing. Digicel borrowed $6 billion to expand. Now they're drowning in interest payments. Grace Kennedy has minimal debt and strong cash reserves. Third, professional management. Grace Kennedy separated ownership from management early. They hired professional CEOs, not family members. Many Caribbean companies stay family-controlled too long. Nepotism destroys competence. Grace Kennedy avoided that trap. Fourth, patient expansion. They took 30 years to expand regionally. Slow, methodical, learning each market before entering the next. Companies that expand too fast, Digicel, CL Financial, CLICO, eventually collapse. Grace Kennedy's patience protected them. Fifth, strong governance. Grace Kennedy has been publicly traded since 1981. That means audits, transparency, accountability. CLICO was private. Lawrence Dupre could do whatever he wanted, no oversight. That enabled fraud. Grace Kennedy's public listing forced discipline. Shareholders demand accountability. That prevented the self-dealing that destroyed other Caribbean companies. These 5 principles kept Grace Kennedy alive through 100 years of Caribbean economic chaos. Today, Grace Kennedy is Jamaica's most valuable company. They're listed on the Jamaican Stock Exchange. Market cap over $1 billion. They operate food manufacturing across the Caribbean. They run First Global Bank. They provide insurance through GK Insurance. They operate money transfer services through GK Money Services. They employ 5,000 plus people across 60 countries. They pay dividends consistently. They're profitable in every division. And they're still growing, not explosively, but steadily, the way they've always grown. Grace Kennedy proves Caribbean companies can succeed globally, but you need patience, diversification, conservative financing, professional management, strong governance. You can't borrow billions and expand to 31 countries in 5 years. That's the Digicel model. It doesn't work long-term. You can't run a company like a personal empire with no oversight. That's the CLICO model. It ends in fraud. You can't depend on one product in one market. That's the Air Jamaica model. It dies when conditions change. Grace Kennedy did it right. Diversify, Grow carefully, manage conservatively, build for 100 years, not 10. That's boring. It doesn't make headlines. You won't get profiled in Forbes as the next billionaire disruptor, but in 100 years, you'll still exist. Still profitable. Still growing. Still employing thousands. While the flashy competitors have collapsed, been bailed out or sold for $1. That's the Grace Kennedy model. Not exciting, just successful. Most Caribbean business leaders could learn from it, but they won't. Because patient, conservative growth isn't sexy. Building cash reserves instead of borrowing billions isn't exciting. Expanding to one country at a time instead of 31 simultaneously doesn't make you look like a genius. Diversifying across 5 industries instead of dominating one doesn't create a compelling narrative, but it works. For 100 years. Through every crisis. Through every competitor. Grace Kennedy is still here, still growing, still profitable. While Digicel drowns in debt, CLICO is bankrupt, Air Jamaica is dead, and CL Financial was bailed out. Grace Kennedy just released their latest financial results. Revenue up 6%, profit up 8%, dividend increased. Same as last year, and the year before, and the decade before. Boring, steady, successful. That's how you build a Caribbean company that lasts. Not by being flashy, by being smart. Grace Kennedy is the Caribbean success story nobody talks about, because success without drama doesn't get attention. But it's the model every Caribbean entrepreneur should study, because it actually works. 100 years, $1 billion in revenue, 5,000 employees, operations in 60 countries. Built slowly, managed conservatively, still growing. That's Grace Kennedy, the boring Jamaican company that quietly became the Caribbean's most successful business. While everyone watched the flashy failures, Grace Kennedy just kept compounding. And they'll still be here in another 100 years, probably still growing 6% annually. Still boring, still successful. That's the power of doing it right instead of doing it fast.
Stay curious. Subscribe to Venture Chronicle.